Welcome to the 10th lesson of the course Investing in Regenerative Agriculture and Food, how to put money to work in regenerating soils and ecosystems at scale while growing a lot of tasty food. This is not financial advice. Please seek professional financial advice before making any investments. I don't have investments in any of the funds we're going to mention later and any of the farms. I'm a small retail investor. I don't have skin in the game. So please find any investment advice, find co-investors, find people that are actually doing this, and make sure you find professional advice before making any investments. We're going to talk about returns. Probably, I wouldn't say the question I get most often, but a question I definitely get often is, what are the returns? And it's a question that's impossible to answer because it depends. It depends on the risk you want to take. It depends how you're investing in this, what you're investing in. If you're investing in farmland, if you're investing in an ag tech company that's building software for farmers, the risk and the potential return and the potential impact are very, very, very different. But it's safe to say that there are interesting returns in regenerative agriculture, but it really depends, as all sectors, how you're putting the money to work. And I think it's good to start with a quote of Sally Calhoun, who has been a tech entrepreneur and became a farmer and became an impact investor in regenerative agriculture, but has been a tech entrepreneur at heart first. So she's saying we got market rate returns from an extractive agriculture system. And we've looked into why the extractive agriculture system is so at risk at the moment in one of the earlier lessons. If you want to see that, please check the link below to see the full overview. But we can expect market rate returns when we have fixed the extractive part of the system, when we have regenerated soils, when we have regenerated agriculture systems, human systems, etc. So I fully believe we can generate better than market-based returns in a regenerated system. But that's a theory. Nobody has proven that yet. And there will be a lag, in a sense that we don't know how long that lag of the J curve, the famous J curve that you always see everywhere, is going to be. If you are investing in very, very, very degraded soils, it could take a few years before systems start kicking in again. But we've also seen in one of the previous lessons that the profitability of regenerative farmers, or farmers that are practicing regenerative agriculture, is way better than the control group, than extractive agriculture. So it really depends, but don't expect easy money or easy returns. Nowhere in the real economy you can find easy returns falling off the sky. This is such a profound shift in how we produce food, fibers, and oils, and it's going against a lot of industries that are making a lot of money, mainly the chemical input companies. So we're gonna expect a lot of pushback, but it's definitely possible to generate fair returns, to generate returns, and we need to have a discussion about what we think is fair, what we think is appropriate, what we want, short-term, long-term, etc. But I just want to briefly touch upon the non-financial returns. And I think Commonland has a very nice system, which they call the 4 returns. We can probably come up with another 20, but these 4 give a nice overview what happens if they start working in a landscape and what they see as returns. So first and foremost, it's inspiration. You don't have to travel very far from a city to see the complete lack of inspiration in most countryside places. They've been completely, like, even as inspiration has been extracted from the local society, and mainly because of the way we farm. And so if we can give people back hope and a sense of purpose, a lot of things start to change. Another return, social capital, jobs. I mean, regenerative agriculture needs more hands. That's not a bad thing. That's actually a good thing. It needs way more engaged farmers. It needs farmers that are observing. It needs farmers that are actually getting to know their soils, getting to know their neighbors, getting to know the local environment. Many of the regenerative farmers, or the farmers that are practicing regenerative agriculture, I know, are setting up other businesses, seed businesses, solar panel businesses, processing businesses, because basically they are creating an ecosystem. So if you can bring back business activity, education, and security, because there are people living off the land instead of extracting, I think it's a good thing. And there are some really, really nice examples of this. Obviously, natural capital, restoring biodiversity, soil, water quality, and capturing carbon. One of the reasons probably a lot of people are in this space, maybe the most important, maybe not. Maybe without social capital, you won't have natural capital, or the other way around, but it's definitely an absolutely fundamental one. And we've looked at some examples in previous lessons. And then financial capital, long-term sustainable profits. Definitely possible. it really, really depends, obviously, what kind of blended capital is needed, what kind of investment is needed. Are you investing in a robots company that does the weeding in regenerative fields? Are you investing in the real estate on a farm? Are you investing in the farming itself? Are you investing in trees? It completely depends on your approach. Are you investing in transition finance? We're going to look at a few of those examples of what to invest in the upcoming lessons. But then I would love to discuss an elephant in the room. I actually took this picture. That's why I always love using it. It's not in the room, obviously. But we, as investors, big and small, we should really be very conscious of the big questions that are in the space. Ownership. Why is land ownership so concentrated in the hands of a few? And do we want that to increase? Why is it so difficult for anybody with a different background in most, let's say, European, US, and Australian countries to get access to land? Why is the percentage of farmers of color so low? Why is the percentage that owns land? Why is the percentage of farmers with a Latino background so low that owns land? Why is there basically a lot of racism in that system? Why the land ownership, the company ownership, the ownership discussion is something we need to address. And do we want more concentration of that or less? And do we want more land grabbing or less? How do we figure out a way to make it much more accessible to new farmers that might want to do things completely different? And what does it mean to be an investor? What does it mean to be an investor in the current time and age? What does it mean to be an investor looking at impact, but also financial return? What does it mean to put money to work? And I think I had a very interesting interview, and I need to check in with him, with Rames Kent. I will link it at the end. He asked a very good question. The central question are you an investor or a gambler? Are you in it for speculation? I hope this land price goes up, or I hope this company will have an amazing exit. Or are you investing, partnering with a farmer, partnering with a food company, and are you in it for the long run? And are you in it for system change? Are you in it? And those questions, I think, are something we need to ask ourselves when we put money to work. And then there's definitely the other side. There are people that are claiming and showing in many cases that you can get double-digit returns in regenerative agriculture. And you're seeing that with institutional capital with 123, which is an interview I will link below. You see that with Stewart, crowdfunding platform we had on the call, on the podcast, where farmers pay quite a hefty fee to get access to capital, but most of them are very profitable and most of them are able to pay this. And this is the only access they get to capital. So if it's the only access you can get to capital, is it okay to charge 12%? And Rizoma, who is scaling up regenerative agriculture, large-scale regenerative agriculture, regenerative organic actually in Brazil, are definitely targeting to close the yield gap, to the cost gap, and are definitely targeting to completely outperform any conventional extractive agriculture system. And many people working in agroforestry claiming that they can completely outperform any other system per hectare. So there's a lot of tension here. We're definitely at the beginning of figuring out a lot of things. We've shown in previous lessons that the profitability of many farmers practicing regenerative agriculture is much better than the control group. So I think it's safe to say there is a lot of space and there are a lot of questions to answer in terms of returns. And I would like to point you to something to focus on, or to focus maybe less on. Not the whole world is made of either debt or equity, which is my next slide. There's a whole space between those. And you can see that with a lot of the interesting things we have discussed previously in the podcast and other places, like Perennial Fund, which is a fund that partners with farmers that don't have to sell their land, to basically finance their transition. And meaning that farmer makes money, the investor makes money. If the farmer doesn't make money, the investor doesn't make money and cannot take the farm, which is usually now the case with a bank loan. Like inflexible investments, I think, are the death of any farmer, because farming is flexible. You have to be flexible. So what I see a huge potential shift is that we're going to be a lot more flexible, and we're going to try to partner with farmers, be on the same side of the table, and help farmers be more profitable, because then we as investors are making more money, instead of being on the opposite side of the table. And basically, I don't really care what happens, because at the end of the day, I have the security of the farm, and I can basically take the farm if the farmer is unable to pay back their debt. I see a lot of work being done in this space between debt and equity, You can see that actually outside the farming world with indie VC, which is putting risk investment in real companies, followed by actually investing in software companies and making really interesting returns. Perennial fund I mentioned before, organic grown, which basically did a management buyout or bought out most of the employees and became steward owned. We had a very interesting discussion actually on the ownership discussion with Armin of Purpose, who has been involved in the deal, Share Tribe. So I will mention a number of those examples in the links if you want to dig deeper. But safe to say that there's a huge space in revenue-based profit sharing, which gets you skin in the game as an investor, gets you actually involved on the good side of the table and the challenging side. So actually, to bring it back full circle, I think there's one sentence we didn't really look into this, which is the market-based returns. We fully believe that we can generate better than market-based returns. This is the quote of Sally that we talked about at the beginning. And I think we have to look into market-based returns. We have to unpack that, because the market returns of agriculture, safe to say, the last, let's say, 20 years have been horrible. Some places they've been profitable because there was still virgin soil that we could extract, there was still virgin soil we could mine, but most places they have been either subsidized, Europe, or subsidized in the US because of crop insurance, and the returns haven't been amazing. There are definitely some exceptions, but I think it's a myth. We need to have an honest discussion about the current returns of our current extractive agriculture system, and we'll be finding out that they're not so amazing. And they're getting more risky by the day. We had a full lesson on the risks of extractive agriculture and how unprofitable it will be, or it is already. So I think that market-based returns, we need to always, when you hear that, ask which market were they based on and show me the data, because there's not too much there. And I think in general, investors in the real economy or in any economy, we are living in strange times. We have to be comfortable. If we're a retail investor, we're a large-scale investor, we have to be comfortable with uncertainty. And that's something I want to end this, before we dig deeper, I want to end this lesson with, that we're at the beginning of a lot of things. A lot of technology is not there yet. A lot of research is not there yet. A lot of farmers are still figuring out certain things. So if you're joining on this right now, get ready. It's going to be a very interesting ride, but it's also going to be a ride full of interesting twists and turns and uncertainty we didn't think about. And just if you want to dig deeper, definitely the interview with Sally Calhoun. I've interviewed her a few times now, but this is the interview, and at minute 26:16, she discusses the return piece. So the quote I just shared. Common Land, we looked at their 4 return model. I interviewed Michiel de Man, who's pushing back the desert, not personally, but pushing back the desert in Spain with using regenerative practices. There's an enormous amount of US acres that is changing hands soon. So into this ownership discussion, I had a fascinating interview with Ian McSweeney, who is working on land trusts. So how do we make sure that this land that is coming for sale soon basically moves into the commons and is going to be farmed regeneratively. Another fascinating discussion with Thomas Ripple, checking in on land use and basically looking at, so we have had a number of interviews with him, and he has been really at the forefront in Germany and in Europe on land ownership and how to take land off the market, make it accessible for farmers, and basically give farmers that are retiring a pension, which is something that usually doesn't happen. Armin, I mentioned it before, who owns the driving wheel, the steering wheel of your company, and how to still invest in companies that are fiercely independent and mission aligned. So if you want to know more about alternative buyout, if you want to know more about how to keep impact companies and farms independent and focus on the mission, definitely listen to this interview. Ramis, fascinating interview with are you an investor or a gambler? And there's some other land ownership and land use structures that are popping up, specifically this one where I interviewed Geert, who is working on Herenboeren in the Netherlands, but actually scaling up throughout Europe now. Common Land for Returns, this is a link to their website. Herenboeren has an English explanation as well called Farming Communities. And if you want to know more about the organic grown alternative buyout space, this is a link to one of the deals that actually Purpose financed. And it's a very interesting ownership construction structure, basically building companies that will stay around forever. Indie VC, working in the software space, but investing in real companies. And Share Tribe did a very interesting crowdfunding deal where they stayed independent, stayed mission focused, stayed steward owned, but still were able to raise quite a bit of crowdfunding and put it to work. And for the playlist, to dive deeper in this, we created a playlist on investor stories, where we actually share stories of many more people that are either putting their money to work or are taking this money to put it to work. And with that, I want to thank you for your attention. Returns is never easy. It's always an interesting subject. So if you have any feedback, please let us know. Get in touch through the website, get in touch through Twitter, LinkedIn, and don't forget to pay what you think it's worth. And at the next lesson, we're going to shift gears from how to the what. So what to invest in, and the next lessons will be focusing on that. And with that, I want to thank you for your attention and see you next time.